Hey, it's Rob Weinberg, and on this channel we empower people to take control of their futures through expert mortgage, financial, and real estate strategies. If it's your first time watching us, go ahead, hit that subscribe button. Also smash that bell so you get notified of all of our future content we're putting out every single week. In today's lesson, I'm going to talk to you about down payments. Specifically, we're going to talk about the down payment dilemma, which is the dilemma that first-time or move-up home buyers have of figuring out how much money they need for the down payment on their next home. So mistakes that are made. I see a lot of mistakes being made around the down payment. Specifically, the big mistake is thinking you know how much money you need down. So myself, when I was growing up, my dad used to tell me, always put 20% down on your home. That's always what I thought. Then I got in the mortgage industry and realized there are programs with as little as 3 to 5% down, even some with 0 down. So the mistake is thinking that you know how much you need down, or taking the advice from somebody that tells you, hey, I bought a home 5 years ago, 10 years ago, and here's how much I needed down, that's what you want to save. What you really need to do is get with a mortgage advisor, figure out what programs are available right now today, and then customize that situation for you and how much money you're going to need. Not one size fits all when it comes to mortgages. So how much money do you really need? That's going to depend on the loan program. So for the purpose of our video today, we're going to be talking about primary homes mainly. So a home that you're going to live in as your primary residence. That's going to have the lowest down payment. So if you are a veteran and you're eligible for a VA loan, you're going to need 0 down. It's that simple, 0 down. There's also another loan program called USDA with the Department of Agriculture. That program also 0 down required. Most home buyers are going to be using either an FHA loan, Federal Housing Administration, or a conventional loan through Fannie Mae and Freddie Mac. For those loans, first-time buyers, it's going to be 3.5% down on an FHA, and it's going to be 3% down as a first-time buyer on a conventional loan. Now, if you're buying a multifamily or something outside of the box, you may need a little bit more down, but generally speaking, that's what you're looking at, okay? Where you're going to need the higher down payment is if you're buying a second home or an investment property, a rental property. That's where you're going to need the 20 to 30% down in most cases. So that's how much, but again, figure out your specific loan program and what you're going to qualify for. Then you can determine and reverse engineer how much you're going to need. So where are you going to come up with this money? If you're not independently wealthy, how are you going to do it? You're going to take money from your job, your income, and then you're going to slowly save, right? It can take months or years depending on how much money you make. So cutting back is a big way that you can accelerate your savings. What I recommend all my clients do that are trying to save for that down payment is, whether it's 3% down or 10%, whatever you're trying to go for, you want to cut back so you can save as much as possible. What you're going to do is look at your bank statements and your credit card statements for the last 90 days. Look at where all your money went. What subscriptions can you cancel there? What services can you downgrade? Myself, I went and I called my internet company that also does my cable and whatnot. I was able to renegotiate some of the services, knock $90 a month right off of that bill. I was also, with my electric bill, able to switch to a third-party supplier. Many states, including Connecticut, have energy deregulation. Our rates went through the roof recently, so there's a lot of third-party suppliers now that are offering rates that are half or less of what the public utility charges. And that, myself, it saved me $80 a month by switching from the public utility rates to a third-party supplier rate. If you're looking for more information on that in your state or your area, reach out to me and I can get you informed. So cutting back is a big thing because it's really going to help you, again, accelerate that savings. But wherever you can cut expenses or eliminate, that's going to be positive there. Next thing we'll want to discuss with you is down payment assistance. This is something that I probably get this question more often than any of the others when it comes to talking about down payments, because people hear about these programs, these state and local and government programs that give you the money that you need for the down payment. If it was so good, why wouldn't everyone do it, right? I'm here to tell you there's an ugly truth to the down payment assistance. So what that is right now, with the market being so competitive, if you go in with a down payment assistance offer, then what about the other people that are offering 3 or 5% down? Most of the time, the down payment assistance does not win out in this current market just because of how competitive it is. If you're someone that really just can't save money, you're lower income, it may be your only option, but I personally do not recommend down payment assistance. If there's any way that you can avoid it and just put that minimal amount down, it's very lucrative for you because you're going to have a much easier time getting a loan. Or getting your offer accepted as well. The other thing with the down payment assistance is that sometimes there's special clauses that are in there, and they will make it so that it's difficult or impossible for you to sell or refinance your home within a certain amount of time. So quick story, I had a client come to me a couple years back in Massachusetts. They had done a down payment assistance program about 5 years prior. They came to me to refinance and pull some equity out of their home. Their home had gone up quite a bit. So we got through the process, and towards the end, the title search came back. The title search showed that they had a large lien on their title, which had to be paid off as part of the closing. And what it did was it took them from being able to get a substantial 5-figure payout from their refinance, and it whittled it down to where they actually weren't going to get any money from their refinance. So it completely ruined their ability to refinance their home. So these down payment assistance, there's a lot of different ones. They have special clauses, and they have things in there and penalties that you need to know about if you're going to take on these programs, because a lot of times you may only stay in your home or stay in that mortgage for a couple years, and you may be facing a stiff penalty or just completely make it so you can't sell your home or refinance at all because of the penalties and fees that are owed. So very important things to keep in mind with down payment assistance. Now, going back to actually putting the money for the down payment, some creative ideas that you can use to actually come up with that money. So a lot of people think that the money they need to buy a home is just in their savings or checking account. But I've actually seen many circumstances where people borrow money or withdraw money from a retirement plan, like a 401k or IRA. Most retirement plans have a clause that allows you to get money from that to buy your first home with little to no penalty. And also you can take a loan against many of those plans as well, where the money won't even leave there at all. You're basically borrowing your own money. There is no negative implication. It does not count against your debt ratio when it comes to getting your mortgage. So it's a preferred method to getting money if that's where you have a lot of money pent up. Another creative idea is gift funds. So many people have a family member that would be better off than them financially and able to give them or bridge that gap between what they have available and what they need to actually purchase a home. So you are allowed gift funds on pretty much every loan program, specifically those for first-time buyers. You're allowed gift funds. It's not a big deal. There's a little bit of extra paperwork that goes with it, but if you have a family member, a blood relative that's well off financially and willing to help you, I've had clients get as many as 4, 5, 6 different gifts from different family members to be able to get into their home. So of course there's other creative ideas, but I just wanted to give you kind of the gist of it today and give you all the relevant information to help you move forward with your home buying plans. If it's your first time watching, again, go ahead and subscribe. Share this video with someone else who may also be looking at buying a home in the near future and need some clarity when it comes to their down payment. Now, if you are in the states of Connecticut, Massachusetts, or Florida, or looking to move to those states, I do offer personal one-on-one consultations. You can reach out to me directly by call, text, or private message. I'll be happy to get in touch with you, and we can set up a game plan for your specific scenario. My direct line is 860-413-3938. As always, I hope that helps, and we'll see you next time. Take care.